Hello, everybody, and welcome to the Dash Trader Newsroom. Market correction or market meltdown? My name is Michael DeJoy. I'm the Director of Educational Service here at Dash Trader, and I'm joined by my co-host, Jill Molandrino from Global Markets Reporter from Nasdaq. Jill, how are you?
Good, doing well. Thanks, Mike.
Fantastic. Let's jump right in. So the Nasdaq 100 pulls back 10% into market correction territory. We've bounced out a little bit. Question on everybody's mind is, do we make another leg down? What are your thoughts?
I do expect pockets of volatility. Certainly, I mean, it's the seasonal time of year. We're going into an election. It's unclear what policy is going to be. We are seeing some economic data come in. Earnings season has been okay, right? My concern is that if you have it doing beat well on guidance, that's when your stock's getting beat up. But Mike, I feel like there's a couple things here. NVIDIA is going to be the tell. That's at the end of the month. That's what everyone's holding their breath for. But as it relates to the more near term, particularly on the action that we saw on Monday, and we had a couple of volatility specialists on with us discussing, spot VIX was at 65. You look at the futures to determine what investors are thinking longer term. It was at 37, I believe was the number. So when you see that kind of disparity, and you think about some of the narrative that was out there, this was the third largest spike in VIX since the housing crisis, since COVID. Put those things into perspective. There were some people out there calling for an emergency rate cut in between meetings. Mike, that's the surprise factor. I don't want to get an emergency rate cut because that signals that things are about to hit the fan. Yeah. So I think that and think, if you were, and again, I'm a longer term investor, but there's something for everyone because there's vol for you guys to trade intraday and swing. But if you were to have gotten out of the market during those heightened times of vol, look at the returns that you missed, right? So this was, the yen is what it's been attributed to because of that unwind trade, because there was some leverage in the market. But I don't think that fundamentals, with the exception of frothy valuations, much has really changed. I don't think one data point is a trend make. So I think this could have been used for opportunities in different types of trading styles. But when I look at it I look to the volatility markets, and once you see that dispersion between spot and the futures, to me, that indicated that it was a little bit more near term than longer. Although not to say that there won't be pockets of vol.
Absolutely. I mean, I think those are some good points. I mean, number one, just technically looking at these charts, and I'm going to see if I can bring up my laser pointer. So, looking at these charts, you have the Nasdaq 100, and you have a, head and shoulders pattern, but it has a weak right shoulder. Whereas on the S&P 100, you have, again, a very clear head and shoulders pattern. Both of them have a neckline break. But both of them are extremely, extremely overdone to the upside. So when you get an extreme pattern, technically speaking, we say sometimes up to 70% of the move is in the last 30% of time. This is exactly the kind of pattern that we teach about in technical analysis textbooks, that, this is a textbook pattern. Markets have gotten really, really overdone. This is a time to take profit. Everybody's got to remember that, in the current market situation, there's a lot of computers trading the markets these days. They react very quickly. So everything has sped up. And these charts illustrate that perfectly. All you needed was one catalyst. The catalyst was, obviously, it was the rate cut. It was also Google's antitrust case, which we're going to be talking about later. There was a lot of reasons why all those sell programs kicked in and took the market down into correction territory. Well,
Mike, I'm sorry.
And I agree with you that I think that we're probably not done with the volatility, but again, it's very, very technically healthy to have a correction when you're that overdone.
Right. And Mike, I think another thing was, the small caps have not participated in anything long term for I don't know how many years at this point. But when we saw the dispersion in performance and again, being a longer term investor, but there are patterns that, after so many years of doing this, that you start to recognize. When I see the S&P and the VIX moving in tandem to the upside, that always makes me a little bit nervous. We saw some of that. And with the move that the small caps had, you have to ask yourself, how sustainable is that? What were the reasons for it? And I just felt like that was somewhat of a tell. And again, I could be wrong. We could move into territory longer term, but fundamentally, some things have not changed with a number of these companies. And if you were not in that tech trade, right? And again, I'm not sure if I think NVIDIA is a big tell, but AMD, Lam Research, why was Lam down? Because of Intel. I mean, Intel's a whole separate story. That's very idiosyncratic to the issues that it has. So this could have been a good opportunity to get into names like an AMD, a Lam Research I have loved since my days when I was, reporting on the streets. Those stories, Intel stories are about its valuation. And I think that's more of a value trap because their growth story, their projections for fundamentally moving along with the AI transition, that story is there. You're not hearing it out of some of these value trap names.
Yeah.
So there's a lot of managers out there who perhaps weren't in some of these names that might want to, pick up performance here and there. So you have to keep that in the back of your mind too.
And that is exactly what we have seen in terms of the buying that's gone on this pullback, meaning that we have seen some institutional participation after the big sell-off. And that's something we haven't seen for a while. A lot of the run-up at the latter end of the run-up was mainly retail taking a position, whereas when we've had this correction, we did see some higher institutional participation on the pullback. So it remains to be seen whether or not they're right. But I do agree with you that NVIDIA NVIDIA is the big tell here. I say
but Mike,
New York accent. I always say NVIDIA.
we were talking. This isn't a pat on the back because there's a million times I've been wrong. But you and I were talking about this when we were on in June together. That it felt things were bubbling under the surface. It was not going to be okay. Let's leave the B team on the desk and take off for the summer. It did not. It was just that feeling things were starting to show some cracks, and it wasn't going to be a boring summer.
Yes, it totally felt frothy, and you and I both talked about this back in June, and then certainly in July we felt that froth in the pullback. And now we're kind of getting this mixed signals. And this brings my next topic to point. Jobless claims yet again, obviously fall yet again. This is a sign that the labor market might still be strong. But my next point is does the labor data, the data that the Fed is actually using, does it include fractional hiring? Because, myself included and many other people are working on a more contractual basis. So, does the labor data that the Fed is looking at, that the various economists are looking at, that we use to make our decisions, is it worse or less relevant now? What are your thoughts on the jobless data and, of course, on the move towards fractional hiring?
So basically like the gig economy, right? That's nothing new. We've had contractors around. I mean, I was a contractor prior to going full-time at Nasdaq. So it's not like that's something, a new sector within the employment picture. What I don't understand is why the Fed continues to rely on data that's backward looking, right? When there are real-time data points as it relates to basically everything, inflation, employment, and so forth. And I feel like we're not getting the most complete picture when we're relying on older data, which is why you continue to see these revisions come in. So I don't know if, perhaps they might consider another model. I mean, that's just, my speculation, but I just don't think they're using the most relevant data. Mike, it would be like you opening up the Wall Street Journal to see stock prices from yesterday's paper to set up your trades for the following morning at 9 a.m. It doesn't.
I totally agree. And you and I have spoken about this at numerous times in the past. It is very odd. I mean, basically looking up stock quotes in the newspaper ended somewhere in the mid-90s.
Right.
Yet
but
basically that is exactly what the Fed's doing.
But Mike, the confusion is when they keep revising, then you get the narrative is, can the data be trusted? Are they trying to make numbers look better or for worse for, whatever political reasons and so forth? And I think that needs to be part of the equation as well, because once you start getting mistrust in the data and massive revisions, it doesn't, from an investor perspective, it doesn't give you that much faith.
And I mean, it brings to question credibility, right? And,
Right.
certainly you had one of the day of the sell-off, that the Fed is going to fix whatever's wrong with the markets. I mean, I forget which guy that was, but I mean, one of the Fed governors came out and said, yeah, whatever, if we take too long, then we'll just go back and fix it. But I mean, it's better
Right.
not to make the mistake. It's easier. Was it an ounce of prevention is worth a pound of cure, especially when there's better sources of data that's streaming, it's real time, a little bit more accurate. So certainly something for us all to keep in mind, that the credibility of some of the data points are coming into question. Next, what are your thoughts on Google and this antitrust case? What are the long-term effects going to be on internet search business? What are your thoughts overall for earnings season? Disney managed to eke out a profit in its streaming business, but I mean, we see a big shift in a lot of what's going on in the tech sector. And
Yeah.
certainly this earnings season, you and I also called this, we said this earnings season was going to be the season that makes the difference. So
Yeah.
give me your insights into that.
This is Google is super interesting. And again, because of our listings relationship, I can't talk specifically to it, but as someone who did their grad work around some of this and someone who's in law school right now, I find it highly interesting on a personal level. I think what's also interesting is, Mike, with generative AI and how that has changed the search model.
Absolutely.
Literally overnight. There's so much that's going on right now, and why I think there's a lot of attention on it. Whether it's Google or any of the other large companies that you expect to be within this group, I think part of the concern is, do you want big tech being the guardrails or the owners of all of this, right? That was kind of the premise around Web3, where it's going to be user control, everyone gets their data back and so forth. Do you think these massive companies are going to let that opportunity go by? So what I think they're trying to do is curtail how much corporate and big money is behind this, right? It's almost like, who's funding OpenAI? How is that data being used? And I'm not making that judgment call. I'm gonna have to curb what I say as it relates to listed companies, but I think the premise behind it and the decision that was made is really interesting, because it's going to have implications across the board. And I think that's been a concern, certainly for many constituents, about who owns their data, how they're using it, how they're making money off of it. Why do they own this? And almost follow the money, if that makes any sense. So that's why I find it interesting.
I mean, it always boggled my mind, being in both the software and the trading business, that the only business besides, the only business that refers to its users as users, besides the software business, is the drug business, right? You're a drug user, right? It almost implies by the word that is used is that there's a degree of addiction. And that always boggled my mind. But bringing the case in point to Disney, Disney is the perfect example of, an old economy stock that has gone into the new streaming business, and its earnings illustrated almost perfectly. Their streaming business for the first time was profitable, but all of their brick and mortar entertainment theme parks were actually showing a decrease in attendance and decrease in earnings. And that really is what we're concerned with in the economy overall. Yeah. And that's what we've been seeing in earnings across the board, that you see, the digital aspects of companies doing well, and you see the consumer aspect slowing down, that as the consumers are running a little bit, they're running out of their cash reserves.
Right. Well, Mike,
go ahead.
Mike, it's not only that, the journal's been reporting on this as well, where, as an example, department stores used to anchor the malls. And they're being more successful when they turn that into food courts and experiences and so forth. Nobody shops in those types of stores anymore, or they don't go into brick and mortar as much. It's more experiential. And if they want to do their shopping, it's more online. I mean, UPS is at my house 5 times a day, right? Yes. So I think that certainly is part of it. It shows the strain that the consumer is having with higher end experiences, such as shopping at a brand name, or, you know, it's not cheap to go
Absolutely.
on a vacation of that magnitude, and kids cost money, and you know, you just it's anything, Mike. You know what it's like if you take you and your son to a ball game. First, you have to park, get there,
Yep.
buy food, buy beers, whatever the case is. Imagine doing that every day at Disney, and people are being more discerning
Yep.
of where they can spend money.
Yeah, and everything is the economy has tightened, okay, but we haven't really seen how much just yet, because for the most part we're looking at old data, which brings us back to the second point that we made, right? We're still don't have a clear up to the second picture as to what's going on.
I mean, wages just aren't keeping up with inflation. Well, I mean,
Without a doubt.
inflation might be down or not as high year over year, but in the past 5 years, there's a number of areas in the economy that are up 20 to 40%. I don't know anyone, with the exception of going elsewhere, that has gotten a 20 to 40% raise to keep up with
Absolutely.
that.
That is
And
100%
it's
the case.
being reflected.
Yes. Well, as always, Jill, you have made some amazing insights, and you and I have been ahead of the curve on some of the things that we've talked about. So thank you so much for joining us, and
Yes.
hopefully
We'll see you market site. Let's plug the show next Tuesday. You'll be live on
absolutely
Trade
next
Talks.
Tuesday it is. Thank you so
All
much,
right.
Jill.
See ya.
Bye-bye. All right, so here is my dash trade. I'm just going to go through a couple of key charts. Okay. So first off, this is the QQQ. We've already looked at this, briefly inside of the show, that we see the 10% pullback from the high from 505 or near 505 at the high down to 425 at the low at the end of the pullback. We have since bounced up, but we're still kind of in a bearish trend until the market makes a higher low. It's still basically in a corrective bearish type pattern. Let's take a look at MSFT, which we've talked about a little while ago. Microsoft has pretty much pulled back from its high all the way back to support. And this key support level at 390. Now, the reason I'm pointing out Microsoft is because of the whole, what was it called? CrowdStrike and Microsoft outage that happened about 2 weeks ago. That pretty much marked the high of the markets. NVDA, which we think is going to be pivotal. You see a nice pullback, possibly another leg up. Basically still in the context of an uptrend. So NVIDIA is still, pretty much leading the market higher as it leads the AI space. Let's take a look at GLD. Gold, the old man, is back on the rise, staying at all-time highs. So another interesting chart showing that, maybe there's, some things to be concerned about with the U.S. economy. Let's take a look at AAPL. Apple, definitely a head and shoulders type formation on Apple. And, that's something to be concerned with. Potentially Apple is starting a downtrend. We could see that there is the price is now below the moving averages on every single one of the charts that we've taken a look at. I'm going to go back to Microsoft. I'm going to go to Google. There's Google. Let's go to, let's take a look at Tesla. Many traders and investors have said that Tesla should be taken out of the Magnificent Seven, because certainly its performance has been lackluster lately. On that note, I'm going to jump back to my slideshow presentation, talk a little bit about, we already finished the market analysis. So we have a live training event coming up on September 23rd at the Nasdaq market site in Times Square. You can attend this training event with me, learn about your dash trader, and also attend the closing bell ceremony. And space is extremely limited. I believe we only have a couple of seats left. And if you'd like to attend, now is the time to do so. You can go to the Dash Trader website, as well as learningdaytrading.com, another website to sign up for that. And what's going to be covered is a light breakfast at 8:30. At 9 a.m., we're going to go through the various styles of trading, from scalping, gap trading, intraday trading, swing trading, options trading, etc. Setting up hotkeys, using the script editor, configuring the trade signal, plus other advanced features with DAS. We will be providing lunch so that you can join us there for lunch. And then after that, at 3:30, we will be going down into the closing bell ceremony, and we will be closing the Nasdaq market site on that day. That is September 23rd. So I hope you can join us. Thank you so much for joining us. As always, stay up to date with all things DAS by signing up to our monthly newsletter and emails. Simply fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel at DAS Trader TV or DAS Newsrooms. Get newsroom reminders. Stay up to date and follow us on social media. That is LinkedIn, Twitter, Facebook, and Instagram. Thank you so much for joining us today, and see you next time.